Back in February, Super Microcomputer hit a price of over $60 per share. However, it hasn't been able to maintain that over the last couple of months, and the stock has thus fallen by almost 50% to a new price of around $31.50. However, a good earnings announcement can be a big catalyst for any company, and Super Microcomputer is set to announce their earnings on April 29th. And current EPS estimates have bottom line numbers falling year over year. The average EPS estimate on Yahoo Finance from 11 analysts is sitting at 53 cents for this upcoming earnings announcement. That would be down from a year ago where they posted 67 cents of EPS. But keep in mind, a year ago when Super Microcomputer posted their March earnings, they actually came in and beat analyst expectations by almost 20%. Analysts were only expecting them to post 56 cents of EPS, and they actually came through with 67 cents of EPS. These are very similar numbers to what we are seeing here today, so it's a likely possibility that Super Microcomputer could repeat this and put up a solid beat during these earnings. And to reinforce this even further, we can see how estimates have changed for their bottom line over the course of the last 90 days. Currently, again, estimates are sitting at 53 cents of EPS for this quarter. However, if you go back 90 days ago, analysts were projecting 66 cents of EPS. Again, very similar numbers to what we saw a year ago. It's very likely that this drop in EPS estimates has come from the fact that we are seeing general weakness in the broader economy, and that's starting to get priced into companies. However, keep in mind that this quarter ended in March, so it's very unlikely that there would be major effects to Super Microcomputer's bottom line due to tariffs and other things happening in the macro economy. Before we go any further, thank you guys so much for the continued support. If you haven't done so already, drop a like on this video and subscribe for more videos like this one. But there's no denying that growth for this company is starting to slow down. In their last quarter's earnings, they reported a GAAP EPS of 51 cents. That is flat to a year ago when they posted 51 cents as well. And we can also see that over the last couple of quarters, their trailing 12-month EPS has flatlined, sitting at $2.32 of GAAP EPS. However, even with a flat bottom line, analysts are expecting the top line to grow. The average revenue estimate for this upcoming announcement is $5.4 billion. That is up 40% from a year ago when they posted $3.85 billion. But again, there's no denying that this growth is slowing. We could see that a year ago, they were putting up revenue growth of over 200% year over year. And right now, we could see that that growth as of the last quarter fell to 55% and is projected to fall to 40% in this upcoming announcement. However, I do think that Super Microcomputer could come in with a solid top line beat. And the reason for this is if we look at the company's trailing 12-month revenue, it is currently sitting at $20.82 billion. And during the company's last earnings announcement in February, they actually dropped their revenue guidance from $26 to $30 billion to a new range of $23.5 to $25 billion. This upcoming announcement will be Super Microcomputer's Q3 earnings. That means we already have numbers for Q1 and Q2. In Q1, they put up revenue of $5.9 billion, and then in Q2, they put up revenue of almost $5.7 billion. If we do a little bit of basic math, we can subtract these two numbers and then divide that number by 2, and what we ultimately get is that Super Microcomputer over the next 2 quarters needs to put up somewhere around $11.9 billion of revenue to hit the bottom end of their guidance range. That would equate to $5.9 billion of revenue in each of the next 2 quarters. That means if Super Microcomputer puts up $5.9 billion of revenue in this upcoming announcement versus what analysts are expecting $5.4 billion, they would beat top line estimates by almost 10%. And not only would $5.9 billion of revenue be a 10% beat versus analyst expectations, it would be 53% growth year over year. So all of this to say that I personally believe that analysts right now have sandbagged a lot of their numbers on both their top and bottom line Topline estimates. And again, that $5.9 billion of revenue is based off the low end of their guidance, the $23.5 billion. If we consider them coming in at $25 billion of revenue for the fiscal year of 2025, that would put the next 2 quarters somewhere closer to $6.7 billion, which would be almost a 24% beat compared to analyst expectations for this upcoming earnings announcement. However, even with that said, you should not discount the risks that come along with this company. They are based in the data center market, and if we see some things around data centers start to pull back, especially with companies like Nvidia, AMD, and Intel, Supermicro Computer will be hit in a major way. And we are really starting to see some of these cracks form in this industry, as Nvidia announced that they are going to be hit with a $5.5 billion charge tied to their H20 processors that they are exporting to China. And this all revolves around the continued restrictions of chips being sent to China. And these restrictions don't appear to be going away anytime soon. We are seeing both Democrats and Republicans agree that sending these chips to China is dangerous to the United States. The restrictions actually started with Joe Biden back in 2022 and have continued into Trump's administration. And it's not like China is a small part of Nvidia's business. From their H20 shipments to China, they brought in around $12 to $15 billion of revenue in 2024, and they are now having to pay $5.5 billion in these charges. At the end of the day, they could be looking to potentially get out of the country, especially as their CEO announced in their last earnings that their exports to China have been cut in half currently. And not only that, but as Nvidia sends these chips to China, oftentimes what we see is companies within that country actually steal their technology. Nvidia now for the second straight quarter has listed Huawei as one of their competitors. And this could be due to the fact that as these chips come into the country, Huawei is taking them, reverse engineering them, and actually making their own versions. And this benefits China in the long run to have their own local companies producing this type of technology. Despite all of this going on, I don't think we will see it yet reflected in this quarter's earnings. And we even saw this with Taiwan Semiconductor. They beat on EPS estimates and even provided relatively strong forecasts for their top line revenue. And I think a lot of these chip companies are going to be focused on the positive things that are going on within their company as they announce their earnings. Specifically, we have seen AMD and Nvidia discuss that they are now producing a lot of their chips out of Taiwan Semiconductor's Arizona plants. This is overall going to be a positive thing for these companies to help them avoid any sort of tariffs. So when I look at Supermicro Computer and what I expect them to announce during this earnings report, I think right now analyst expectations for the company are extremely low. If they can come through and beat numbers, we could potentially see valuations start to expand. Right now, their forward P ratio is sitting at an 8.63. This is incredibly low. If the company is still putting up 50+% top line growth and they're still able to grow or at least maintain their EPS numbers, I think there's no reason that Supermicro Computer shouldn't trade for at least a 15 forward P ratio, if not a 20 to a 25 forward P ratio. And personally, the reason that I own Supermicro Computer is even if over the next year and a half they underperform on their EPS and only put up $2.58, their PE ratio is still only sitting at a 12.21. I think at the end of the day, again, this company should be valued at least a 15 to a 25 forward PE ratio. That means that the stock price, even with this underperformance, could trade anywhere between $38 to $64 per share. And again, that's just with underperformance. If they outperform over the next year and a half, then we could see EPS anywhere from $3.65 up to $5 per share. And that could result in a stock price at an extreme range of anywhere from $55 per share to $125 per share. So across the board, I really don't see much opportunity to lose money in Supermicro Computer at a current stock price of $31.50. And as I mentioned, I do own Supermicro Computer, so keep that in mind. I own it in my YouTube portfolio, which currently has a value of $55,600 $631.69. And it's actually my number 2 position in terms of size. Right now, it has a market value of just over $6,300. I am down almost 2% on this position, and I hold 200 shares. My only larger position is Google, which I currently have a market value of $9,600, and I'm down almost 4% on. The other positions that I have in this portfolio are Microsoft, Visa, AMD, SoFi, Alibaba, Palantir, Apple, and PayPal. And on top of that, I do have a cash pile of just under $25,000. However, this will be decreasing slightly on Monday when the market opens because I do have a couple of orders in, one for PayPal to build out my position a little bit more in that because it's only sitting at $600 right now, and then another order to buy more Google. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Let me know your thoughts on Super Microcomputer down in the comment section. Thank you guys so much for watching. If you did enjoy the video, drop a like down below and subscribe for more. And as always, have a wonderful rest of your day. And for the joke of the day, where do fingers grow? Check the comments down below for the answer. Thanks for watching.